I think it is important today, and really it's that classic conundrum for the market looking at payrolls, in that you want a figure which is going to express a continued recovery in the US economy, but you don't want it to be so strong as to bring into question the extent of the policy support. And so for me, when I look at the data and the estimates around today's numbers in particular, it's the range of estimates which is most notable. So normally we'd be looking at payrolls, we'd be looking at the unemployment rate and arguing really about the decimal point on the unemployment rate. And here you have about a 5 to 6% range in the unemployment rate itself. And so clearly going into this, market participants are pretty confused about what the number's going to look like. But for me, something that suggests the US is on this path of improvement, but not too strong as to start to question how supportive the Fed might be over the coming months, would be the perfect scenario for the equity market.
The trouble is we've got to throw in the spike in virus cases, and we started the programme this morning by talking about this 50,000 number, which again is a terrible indictment of the way that the virus seems to be being treated in some states in the US. How concerned are you that this just begins to shut down sectors of the economy that had already started to reopen?
Absolutely. And I think from here, tracking the path of the virus is going to get steadily more difficult, because through March and April, really the right metrics to be looking at were those headline case figures. And that, I think, is what the market was pricing off. Whereas now, I think it's going to be more nuanced than that. You're going to have to look a couple of levels below, really, thinking about not just what the federal government instruction is, but hearing from the state governors and the local counties, and hearing really what's going on in the ground in the US to try and get an accurate feel for how that's impacting activity. And then similarly in the data flow, we're shifting away from a focus so much purely on the cases and more into metrics such as hospitalization capacity, or hospitalization rates, I should say, and also some of the big data looking at how frequently people are moving around and the type of movement in terms of whether that's to work or whether that's to shopping, for example. And so from here, clearly more difficult to track through the second part of this year. But I think the trend that we've seen in the US over recent weeks is concerning, because we're starting to see that reflect in a slowdown in businesses willing to open up, and also a slowdown in the willingness of consumers to go out and spend, which has been really what's been driving this initial part of the recovery so far.